Life insurance is not an investment. Term life insurance doesn't even pretend to be. But there's other products out there, and I have a rule. Don't buy anything you don't understand. On the other hand, investing is a different job from life insurance entirely. And the more you control your expenses in life, the more you can invest, and the longer your time horizon, the more compounding interest you can benefit from. This video is going to break down the differences everyone should know between life insurance and investing, and the benefits of keeping these two things separate, because there's a lot of life insurance products out there that also promise to be investments. So what's the point of life insurance? The point is protection. If you picture a young family, 2 parents, little kids, what's the most valuable asset that that family owns? It's not their house or their 401k plan, it's the parent's human capital. Another way to say that is their earning potential. It's the decades of income that hasn't happened yet for their family. And this is a hard topic, but life insurance is a hard topic I have to be honest with clients about. If a young parent dies, their human capital is gone. But with life insurance, the surviving parent can get a big check, which covers the income that disappeared. So when you're in that season as a young parent with kids at home, and you have more future ahead of you than savings currently in your bank, insurance is genuinely valuable. But the goal is to outgrow life insurance entirely. If you're wealthy, you might not need to buy insurance because your family's already taken care of. Then what you probably need most is more education for everyone in the family on what money even is and how to handle it once you have it. So while a young family may need a death benefit because their portfolio isn't big enough, a portfolio that is big enough to last the rest of their life covering their family and all expenses, that right there is the insurance need being covered. It's ensuring that when you're gone, everything will be okay financially. And an idea that I like is that insurance is a bridge, and investing builds an island on the other side. If I buy cheap term insurance to protect my vulnerable years, and I grow my portfolio on the other side, then one day I look up and I realize that I don't need the bridge anymore because I'm already standing on solid ground. Okay, now we understand the practical, real goal of life insurance, but we still need to know that investing is not just picking the thing with the biggest return. 4 notes here. 1, costs matter more than people realize. If you're obsessed over returns and unaware of the fees and other costs involved, including an advisor's cut, the salesman's commission, the fund's expense ratio, then stop and learn what all the fees are that you're paying. Costs compound against us the exact same way that interest compounds for us. And these can amount to life-changing numbers over time. If you want to see examples, read Unshakable by Tony Robbins. It's a great book. 2, how much you invest. Control your expenses in your daily life and you free up more money to put to work for you in your long-term investments. 3, time. Let compounding do what it does. This is where quotes like, investing should be more like watching paint dry or watching grass grow. And if you want excitement, take $800 and go to Las Vegas. Which, by the way, is a quote from a Nobel Prize winning economist. And 4, risk. This is my professional take. Investing isn't only about gains. It's also about controlling risk. That's diversification, allocation, and location. How many companies do your investments cover? And where in the world are those companies? Are they all in America? And then there's the bond market. An economist doesn't ask, what did it return? They ask, what did it return for the amount of risk that was taken? So we've already covered insurance and investing. Why not just merge them together? Well, I'll offer you a free story. At a weekly business meetup that I go to, there's an insurance salesman, and he's told me his title is a financial expert. And he told me that there's a specific product he knows about that I don't know about that's a better investment than anything you would ever find in the stock market. That is what he said to me. This is not theoretical. This is not made up. This isn't from a book. I experienced this 3 months ago. Now, he didn't know that I was an advisor, but he was telling me that I could become my own bank. And I needed to realize the benefits of why that could be a good thing. Let's take the exact strategy he was outlining for me and look at it closely. I would sign on with him, he would get a commission, then his strategy would, quote, only work if I overfund the life insurance policy, then borrow that money back out as needed. And somehow that makes me my own bank. A friend of mine, Jim, another advisor, and he's been doing this roughly 20 years longer than I have, he said, Cam, imagine a car insurance guy pitched you this idea and you just showed up looking for car insurance, but he says, hey, I've got you covered with the car insurance, but also if you pay me extra every month, then if you ever need any money, you can borrow that money you gave me back with a fee plus interest. I'd like you to ask yourself, are you your own bank, or did you just pay your insurance guy money because you didn't fully understand what he was saying? Another thing Jim has told me, and this is just his opinion, he says, I've never seen a family make money on a life insurance policy, not once in my life. That's a strong opinion. I can't verify if it's true or not. It might not be true. There's probably someone out there who's like made money on life insurance. The question is, did they have an accurate experience to what was sold to them? And if you compare it to other investments, how does it compare? What's its benchmark? A million other questions. So I asked him, because I'm always trying to learn, I said, Jim, what do you personally do? And he said, well, for my own household, I separate investing from the insurance. And I recognize the actual goal of each thing are separate goals. Before moving on, another example for whole life policies, there's the life insurance dividend. Another way to earn. It's sold kind of like a stock dividend, like profit sharing. And someone else in the industry pointed me to a US Treasury decision. It's the decision 1743. And it spells out what these whole life insurance dividends really are and how they're not dividends at all. It's actually a refund of an overcharge. They deliberately charge you too much, hand some of it back, and call it an investment return, which is not the same thing as real growth. It is a refund, and you could consider it getting change back from a bill that they had padded on purpose. So life insurance is not an investment. You're getting your refund wrapped in a bow, and you might be led to believe that it's a similar outcome that you would get from a stock dividend, and it's good to know the difference. So no, life insurance is not an investment, and that's the point. Investments are important and life insurance is important, but if you're ever looking at a product, even 10 years from now, maybe it's something that doesn't exist today, please do your research and understand it before buying it. The key is that you understand it, not that the salesman sitting across from you understands it. That salesman, it's already good for them. They'd be making money off of you, and that's not inherently a bad thing. You just need to figure out whether this is a good product for you or not before buying it. My name is Cam. I'm a financial advisor, but I am not your financial advisor, and I hope to see you next week for another video.